So, exploring for yellow and white gold. My key talking points this year have been two macro level narratives that are unfolding, which actually should be extremely good for resource juniors. One is the geopolitical conflict between the global West and the global East, which I do not see any healthy resolution to, which should be driving up interest in gold and as well as in the other metals that are required for everything. And the other is the energy transition, which if we are to meet our 2050 net zero emissions goals, we're going to need a lot more material, a lot more metals such as copper, nickel, lithium, rare earths. And so there should be this tremendous push underway right now for exploration juniors. And yet we're in a bear market. The capital has evaporated. And the big threat is you can, after a decade of making no money on your term deposits, you are now able to get 5% to 6%. And the Fed on Wednesday said, we think these high rates and possibly in the interim higher rates will persist into 2026. That really takes the boomer audience offline. And the younger audiences, they don't really understand this sector. So we are dealing with a very difficult space going forward for the resource juniors, which is why if you can make like 5-6% no risk, if you're going to be in this space, you're going to have to look for stories where you can make 5, 10, even 100 bagger returns. And the only way to really do that is through discovery exploration. So yeah, these are the two key topics. And in the case of gold, we've got all the above ground gold stock is now worth about $13 trillion. It's about 6.5 billion ounces out there. They are a huge overhang. And the problem with gold is kind of an inflation hedge. And if you take the $400 gold price in 1980 after it was released from its $35 prison and adjusted from the past prior 40, 50 years of being a fixed price metal, today if you inflation adjust it, $1,500 is the inflation adjusted price. We've got only a 29% real increase in the price of gold. So people are mumbling about, gold's at $1,800 to $2,000. Why is everything so dreary? Well, the low-hanging fruit has been harvested in the last 30, 40 years, and the cost of producing gold has gone up, which is the whole idea of gold going higher has now become a key talking point for everybody. And here's kind of what's driving the potential for a higher real price. China and the United States, their GDPs are converging over time. Now, there's a lot of talk right now that China may have overdone its authoritarian hyper-surveillance state system and may be undergoing an implosion. That remains to be seen if that happens. But as the United States becomes not so much the supreme dominant economy in the world, there is a push to get away from the US dollar as the primary, as the world's reserve currency. And with the Russian invasion and the Chinese-Russia axis, there's now desire to get away from the US dollar. And gold's supposed to be the bridge for this. It should be going up in real price terms. As an inflation hedge and all that, that doesn't help deposits that are marginal at the current prices. So the real thing is, when will there be a jump in real demand that pushes up the real price of gold? And again, this global East versus West, it's basically the sort of United States and Canada, Australia and Europe squaring off against Russia and China. And the global South, they're sitting on the fence, not really making a decision. They're not supporting the global West in terms of opposing the invasion of Ukraine. And they're keeping their options open. They'll deal with whomever gives them the best deal. So half of all gold is in jewelry, and that's probably going to stay there. 14% is fabricated into something, doing something useful. And another 20% is in investment bars and coins, which people sort of hoard as an alternative to being exposed to currency fluctuations. But only 17% is in central banks. And although there's been talk about central banks increasing their holdings, it has not really made a big difference yet. But this is the next step, is when the central banks step up their purchase of gold and just take it offline. That's what's going to push the price higher. So here's a matrix that I've created for different grades and prices. The red area is like nothing works at those grades and prices. The yellow is where open pit is possible, and the green is where underground, it needs to be for underground to be possible. If you find something open pittable in here, hallelujah, you've got a winner. Except nobody's really finding open pittable deposits that are in this grade range anymore. We're stuck in this $1,800 to $2,000 range, and even if we go to $2,000, $3,000, the optics of it will stimulate a lot of interest in the sector, but it doesn't really make a huge difference in what is worth developing. So this is why I say you have to explore for something that's going to work in the range that we have right now. Now, the energy transition is a different story altogether. It's about trying to, save the planet from heating too much or more than 1.5 degrees by 2050. And there's people, I talk to geologists who say, well, we've had a global warming, we've had ice ages back and forth and all that. We should just, go with the flow and adapt to whatever is coming and not try to change anything. Except when you look at this map here, oil production, United States biggest, Russia second. Natural gas, United States bigger, Russia second. And then coal, China, most of its electricity comes from coal. Yes, they have nuclear and they've got more power plants. But China has already switched to electric vehicles. They don't really care about the climate change aspect of it. They care about their vulnerability to supply of these fossil fuels to keep their economy, their cars going. So in China, at least, the energy transition to electric vehicles is happening. Here, it's also starting to happen. The car companies have gone beyond the point of no return to adapt to electric vehicles. And in 2040, right now, fusion research has gone beyond government programs. Private sector money is now going into fusion research. It's actually becoming conceivable that by 2040, fusion could replace all forms of power, even uranium nuclear power, and it'll be clean, and it'll be an order of magnitude lower cost. It'll be a huge revolution. So adapting the electricity grid and getting cars to be electric vehicles, it's kind of a stepping stone to a future. Now, the pessimists say fusion is always tomorrow, always 2 decades from now. But maybe we're coming to a tipping point. So the EV sector is going to continue to be a major growth area, whether or not climate change policies change or subsidies disappear. Now, this is the history of gold production annually over the last almost 90 years. This is lithium. Most people don't understand the change that has happened. In the case of lithium right now, we have the bad optics of the price having shot way up to the $30, $35 last year because there was an imbalance in supply. The Australians were so good at mobilizing new pegmatite supply that they oversupplied the market. The EV sector wasn't growing quite as fast as it was. And so this year we've had like this horrible bungee plunge of lithium coming back to Earth. This was the lithium winter that slowed down Lithium Mania 1.0 and basically stalled a lot of projects, especially in Canada. Companies had these lithium projects And when the price collapsed below $3, none of these pegmatite deposits work. It's not going to happen. But the growth potential is extraordinary. The IEA predicts that just with the ordinary, with electrolyte, like non-solid state lithium-ion battery, we need 600% more lithium supply than we have now by 2030 just to meet the 2030 net zero emissions targets. And you can see also the important extra demand for nickel and copper that's required. And so what used to be a $200 million market in 2005, last year, if you took the average spot price, it was like a $50 billion market. The reality was probably more like a $20 billion market because lithium is sold on long-term contracts, so not that much lithium was sold at the $35. But it's the idea that by 2030 and 2040, lithium is going to be $100 to $200 billion a year market, and gold, by the way, is a $200 billion a year market. Copper is something similar. This is staggering. This rapid demand increase for a metal that's relatively abundant is unprecedented. And Rio Tinto is pretty much the only major mining company that takes lithium seriously. In 2021, they put together a case saying that we need 60 JDARs by 2035 to meet the lithium requirements of ordinary non-solid state lithium-ion battery cars. But there's something else that's happening. The holy grail of a solid state lithium-ion battery, people had kind of given up on it, but Toyota announced a breakthrough, which wasn't a brand new configuration, but it was a manufacturing breakthrough. They were able to figure out how to make a solid state battery feasible by making it cheaper. So it works, but it's been horrifically expensive, so it's not a commercial option. This is a complete game changer because frankly, I personally don't want one of those kinds of electric vehicles that are available now if I have long distances to drive and wait 3-4 hours for it to charge. That's not my game, and that's not the mass market game. So it's been a bit of a pipe dream to expect the masses to adopt electric vehicles by 2030. But if you give them a Camry or Corolla, it's got 1,200 kilometer range on a 10-minute charge, everybody is all in, and you price it at the same price. So this is coming, and I've done the numbers. I figured out what makes a solid state battery different is that graphite in the anode, lithium metal gets substituted for it. And you need only about 16 kilos compared to the 67 kilos of graphite that you need for a typical EV. But that's more than double the 10 kilos required, which is in the cathode and the electrolyte. And the reason the solid state battery has been such a dream is because the ions, when they travel, if you have lithium metal in the anodes, they create dendrites, literally little spears. And if you puncture the electrolyte wrapper in the middle, you get a short circuit, you get thermal runaway, you get a really nasty, dangerous fire. So solving this problem, making this battery safe and highly efficient, Toyota, which stuck with sort of hybrids and plug-in hybrids, the Prius and all that, and said, we're not doing EVs, they are now going all in, and they're going to be the Tesla killer by 2030. They'll have the high-end model out by 2027, and the input costs, they're going to be stable. They're not going to change much, but it's the processing cost. Look what happened to solar. Solar panels used to cost a fortune, and it became more and more efficient at making them, and now they are cheap so that everybody wants to install them and benefit from solar power. So the lithium, not just 600% more needed by 2030, 35, 1,200% more is going to be needed. So the demand picture is increasing extraordinarily. And part of Lithium Mania 1.0 was a company called Liontown, which had a project, got it from Ramelius, a gold company, greenstone type belt, Archean craton, it had pegmatite on it. And Vermilius, well, we're into gold, we don't care about pegmatite and lithium or anything like that. They now have a serious bid from Albemarle, which is the primary Western lithium producer, at 6 billion Australian. Now this project will be in production by April, May of next year. So it's gone through this 6-year cycle of exploration from scratch, feasibility studies, and construction financing and building it. So Albemarle understands what the needs are, and so they're subject to the due diligence. They will take out this company and develop it. And here's are the Canadian versions. The Albemarle project, Kathleen Valley, basically is similar to Patriot Battery Metals James Bay CV5, which just had a maiden resource estimate, and the Galaxy Sear project of Allchem. Now, it looks like they have more here, but they're only putting 80 million tons into production, most of it underground. So the numbers are high enough that it works. So the thing with lithium is, don't worry about the lithium price or its trend. $30, $35 is unsustainable. There's way too much lithium out there that's in the money. That's not your long-term price. Even $10, $20 is kind of high. It's the $5 to $10 range where that's the pegmatites that are grading 1% or better lithium oxide, those are going to be in the money. So there's right now a huge exploration boom happening in a part of the world that's not known for pegmatites, but they've been observed for decades. Well, explorers were looking for base and precious metals, but because it was a nothing market supplied by the Greenbushes monster in Australia and the brines in the lithium triangle, nobody cared. Now people are going through the archives and researching, finding these, putting boots on the ground, figuring out if they're spodumene enriched as opposed to a barren pegmatite. And it's like 150 years ago when you're prospecting in the United States for the first time, you're coming across an outcropping high-grade gold system, a Comstock or something like that. Now there are Comstock equivalent deposits there waiting for somebody to do a faceplant onto them. And the interesting thing about this, like here, this $5 to $10. So right now it's about $11. But look at this range here. If you're dealing with these 1% plus deposits, the rock value is staggering, even down at $5 a pound. Now, because you have to refine it and that, the cost structure is higher than, say, with a gold deposit. But still, to find open pitable deposits like this just staring in your face, it's incredible. And the James Bay area is now recognized as Canada's potential equivalent to what's coming out of Australia, out of the Pilbara and places like that. And there's 2 orders of exploration. There's first order where you're looking for the first time. The second order is where you're gathering scientific information, lake bottom sediment, value data, glacial history, geological context, putting it all together for the first time and homing in on targets that are potentially right there underneath the moss, a major lithium-enriched pegmatite. And the 2 companies that Patriot Battery, I missed the boat, everybody missed the boat. People say, okay, missed the boat. No, we need 60 of these Patriot Battery metal type discoveries, maybe 120 if Toyota solid state battery is real. So look at how this company went from a nothing burger just less than 2 years ago. Right now it's got about $1.5 billion valuation, and Albemarle just put in $100 million at $15 so that they don't have to go to the markets to raise any more. And this is Brunswick. It has a $200 million value, and its Mirage project, it's also a bunch of spodumene boulders, could end up being something similar to this. So we're in this incredible sort of cycle of where this stuff is staring in our face and the public doesn't quite get it yet. And I've created a lithium index of the, so far, 65 companies that have moose pasture in the James Bay area. This is the beauty of this place. The dumbest, most worthless company could actually make a world-class discovery. And here's a list of them. I have my favorites when we talk about them as part of my subscription. And somebody told me Friday, another Australian company just acquired a project in James Bay. So there'll probably be 80 to 100 companies. The good stuff's already been picked off. The companies who know what they're doing have been putting all the data together and staking the areas that make sense. The fly-by-nighters, they'll stake all the other garbage, but who knows? Because mapping isn't a perfect science, there could be something mismapped. And again, here's the rock value matrix. At $10, 1% is equivalent to 8.5 grams. At 2%, 17 grams, or 6% copper, or 12% copper. And if you go down to $5 a pound to these corners here, it's 3% copper, or 4 grams per ton stuff. So where do you find open pitable stuff staring in your face with rock values like that? And two companies that I wanted to have DOS exploration here. That's my sort of science-based lithium junior, but because of the forest fire closures that stole 3 months of prospecting, summer prospecting, boots on the ground from us there now, so they were too busy getting what boots on the ground done right now to come. But Silver Range, well, I was able to get them here. They are my equivalent looking for, like a science-based company, looking for epithermal and carbonate replacement style deposits that are high grade. They're not going to find a big monster sticking out of the ground, but sometimes there are tips of icebergs that past prospectors dug around and then it sort of pinched away and was gone, and I gave up on it. And Silver Range, it goes through all these projects, all these old archives, and it brings new science to bear, science about alteration studies, models of epithermal systems, to try and make a case that there's actually a system here with a big footprint. And if you look deeper and harder, you may find an iceberg beneath that tip that was sort of passed over in the past. And again, it's science, it's bringing method to bear. And they have 28 projects in southwestern United States, Nevada and Arizona. And as you can see, they've been a bottom fish pick for quite a few years for me. And this is like, if you want a prospect generator farm out company that's looking for high grade gold, silver type discoveries, this is the one that I say is a must have in the portfolio. They're not spending the money on the drilling themselves, so they don't blow themselves up thinking they got something good. This is the sort of conservative strategy that exposes you to substantial upside if they deliver. And epithermal is the history. Here's the American history of supply. Most of this is epithermal type gold supply. Then in 1980, Carlin type comes in, totally eclipses American gold production. All of this is primarily Carlin type. That's become quite difficult because now Barrick and Newmont have created this joint venture with a monster area of interest, and they control all the roasters and that. So looking for Carlin type deposits by a junior, everything's going to be undercover. Some of you may remember I used to be super excited about Nevada Exploration Inc. It's just too difficult and expensive to find these blind targets in this part of the world. But when you look at the exploration history of Nevada, this is Mike Power's stomping ground. He's going through all that stuff and checking it out. And not many companies are doing it because epithermal deposits have been kind of uninteresting. They had their low-grade, oxidized, at-surface deposits that were heap leached as open pit mines during the 80s and 90s, but that's all been taken care of, and there hasn't really been a hard look for hidden high-grade systems. And again, you want the high-grade system because if you're going to be stuck with underground mining, it needs to be high-grade. And I was on a tour in Nevada, the Tonopah tour. I looked at a number of companies, managed to go by, visit Goldfields, where Mike actually lives in Goldfields. It's kind of like a living ghost town. It's got all these derelict buildings and that, but people live there. And there's going to be a revival of discovery exploration in places like Nevada and Arizona. So Silver Range is the kind of company for that. Companies like Dios Exploration for the James Bay pegmatite hunt. Those are kind of like if you want to bottom fish right now and have upside to, 1,000%, maybe even more. That's the kind of stories that you should go after. Thank you.